Mark, let me begin with you because we've talked about something like this happening for a long time. What does it mean now that it's finally here?
This company is flexing its pricing muscles. This is the fourth time they've done this. They most recently did this at the end of 17. You got the numbers right. It's about a mid-teens percentage, called 15% increase in pricing. And what it's going to allow them to do is either take that to the bottom line because price increase is pure profit, or better fund, better finance their content obligations. So just to put some context around all of this, if this price increase successfully goes through, you're talking about $1 billion in incremental revenue and profit to Netflix next year. That's just in the U.S., and if they expand it globally, it's $2 billion, and that would be somewhere between 5 and 10% boost to the top line and potentially to the bottom line, depending on how much they want to drop or depending on how much they want to spend on content.
How much do they think? How much do they give back in terms of profits?
I think the most reasonable scenario here is they'll probably keep most of it to keep feeding the flywheel to buy more content. And so then the real action question for investors is, will this price increase stick? How much confidence do you have that they'll really get through it? There's some point at which you can't keep raising prices. We think there's at least 4 reasons why the price increase will stick. We have survey data that shows very high levels of satisfaction. We specifically ask, and have done this over the years, Netflix subs, how tolerant they would be of a price increase, and we see pretty high levels of price increase. Third, there's no real cheaper alternative. Hulu is 25% more expensive for a comparable plan, and even Amazon is a standalone Prime subscription service. Netflix just brought its prices up to match that. So there's nobody cheaper out there. And finally, just a value proposition. Look, you can Netflix and chill, watch Bird Box at home, and save yourself $20 instead of going out to the movies. Like that kind of value proposition, there's very few things in this country that are as good as that. We think the price increase will stick. That's one of the reasons we like the stock. 450 is the price target.
Matt, do you agree? Do you think the price increase sticks for U.S. subscribers here?
Yeah, look, I mean, if you go back to 2016, the last time we saw any type of a price action of this magnitude, what we saw was a very modest blip in subscriber adds, a little uptick in short-term churn. But if you go back and look at 2016, they got through that year with significant revenue growth despite the material uptick in pricing. So I think we're probably going to see a very similar scenario here in 2019. But again, as Mark was saying, it's very consistent with the strategy, right? More and better content yields more subscribers and pricing power, and thus more revenue. You reinvest this back into the content, and the flywheel continues here. And just to add to that, tactically and timing-wise, this makes a lot of sense as well, right? Because you're raising prices into a strengthening content slate. We've got Stranger Things, probably one of their top 2 shows by mid-year. We'll get the final season of Orange is the New Black probably by mid-year. 13 Reasons Why, again, one of their top 2 shows, likely later this year. The next Crown later this year. So again, tactically, it makes a lot of sense as well.